God damn, bro. God damn, bro. What the fuck is going on? God. Seriously. Oh, these. Hmm. Shit, is the NQ back? Is the NQ back? That's the question. Is she back? All right, we'll see what happens here. Hmm. Hey, what's up, game weight? That's right. It's 3. Well, I mean, the rules say we gotta wait the 45 minutes. You gotta wait 45 minutes, or not 45 minutes, 15 minutes until 8:45. After the 15-minute range. So I figured that well, ain't no point looking at it as it pumps up, looking like it's about to leave. Oh yeah, I meant to respond to something that Smith sent me earlier. Smith sent me that he accidentally went long in a mini versus a micro. Okay, yeah, whatever. 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 I traded the Nasdaq yesterday for the first time in a long time, and that shit went exactly how I thought it was going to go. It went from trading to gambling real quick. Real quick. The number on the screen didn't even matter. If you was with me last night, I was up 6K yesterday trying to get more in an Apex account with the trailing drawdown. I didn't even care. I was like, man, I want more money. That shit was going up. It just kept going up. So I just kept trading. And I got caught in a pullback after being up 3K, and it pulls back. And you know how that shit go. And then obviously after it blows the account, it continues to go into the upside. So so I know the Nasdaq is a real drug. It is a real drug. Yeah, allegedly, accidentally. Yep. Yeah, accidentally. And then you're like, oh well. I mean, I'm in it. Oh well. Let's see how it plays out. Oh my god. Oh man, look at that, man. Okay. You gotta wait for the 15 minutes. You got 5 more minutes in this, man. Damn, look at that shit break out. Well, yeah, let's see what happens, man. This shit is breaking out, man. That's so crazy. And apparently, each contract has its own all-time high. This contract, the all-time high on the September contract, is currently 22,871. If you go to the December contract, its all-time high right now is 23K. I don't know how or why it reached 23K on the December contract, but that's its all-time high right now. So I guess these contracts all have its own all-time highs, and that we shouldn't be going off of a previous contract's all-time high. That's something new about futures I didn't know. The continuous contract, its old all-time high was at like 425 or something like that, but that's obviously not the case no more. You say usually when it breaks before it's set, it reverses back into the range. And honestly, Alfred, that's what I was expecting. I was expecting a push back into this into the opening range. I'm not going to keep adjusting and moving it. So when we get to 45, we'll set up the range. It looks like this thing wants to continue to go up to the upside, but we'll see. We'll see if we'll get the fake outs. We'll see if we'll get because I'm looking at the ES right now. I mean, look at all this liquidity on the ES. You got all this buying, and then you got people trying to get in front of a moving train. And if you've seen any video where someone jumps in front of a moving train at 10 million miles per hour, we all know that that doesn't end well. So we'll see. Apparently, a lot of people sitting at 160 on the ES. Actually, let's look at the liquidity real quick because we're seeing a lot of there's a lot of liquidity. I guess these money managers must feel comfortable putting. Oh, actually, never mind. I'll take that back. We're doing this. Wow, look how low the liquidity is today. Huh. That's surprising. That's surprising. We're only trading 200,000 contracts on the MNQ right now. What's going on? We got the market just going up in one direction. The market is trading at low liquidity. That's interesting. No, that's not what I'm saying, gain weight. What I'm saying is that because I could have sworn at one point in time, if there was an all-time high on a previous contract, then that all-time high was on the next contract as well. I guess I'm just now realizing that that's not the case. And apparently, I'm not the only person that thought that because I saw a lot of people saying, "Will Nasdaq take out all-time highs?" And so I'm not the only person that thinks that. I mean, we're just speculators. We're not trying to take in any of these products, so we don't particularly care. We're just trying to buy it low and sell it high. That's it. And that's all I need to know about anything I trade is if I buy it at the lowest price, I want to sell it for as much as possible, and vice versa. I don't really particularly care for the technicals. All right. So honestly, I think we'll probably get a fake breakout to the upside, honestly. I think that's probably what we see. All right, we got about 15 seconds. Because we're trading into a previous area of supply. All right, here we go. The first 15 minutes is locked in. All right, we're locked in at a high at 25, and we're locked in at a low at 490. All right, we locked in. So what I'm going to do is I'm going to I'm in the sim. I'm not going to trade the Nasdaq and eval because I can't. Apparently, I go straight to gambling afterwards. So I'm going to attach this limit to this 21 EMA because it does seem like if it is going to break out, it's going to tap this 21 EMA before it does so. So as it moves up, my order is going to move up. This is the range. We'll see what side she chooses. We can look at the ES and see and draw out the range for the ES as well. I mean, shit, since we're here. So 153 is the low for the orb. And 160 is the high for the for the ES. So with the ES, I do things a lot differently. I don't wait for the pullback on the ES because I have a big enough stop. So I'm actually going to put my entry at 161.25. He said biased. That needs to pull back 50 ticks. 54 ticks on the Nasdaq. What is 54 ticks? So it's about 13 points. Okay. I didn't know I was already in. All right, so we're still in this range. We'll see if we'll see what happens here. Mm. Oh no, Cave Trade, I'm in the sim. And so this is not I'm not going to be I'm not going to waste any mental energy in the sim at all. At all. Because technically it didn't even break out. I just wanted to see if they was going to hold the 21 actually. So I was just kind of testing that out. Yeah, this is not an eval, this is the sim. You know what, Alfred? I'm trying to break out of this rut, man. I gotta get used to this. I gotta get used to just having heavy size at this point. What happened on Friday? We had a 20K day. We had a 20K position. That was a 20K position. I got to get used to that. Got to get used to that. Yesterday, the ES had a fake breakdown. It was a fake breakdown yesterday on the ES. You know what? It was a fake breakdown. Because usually, so what I was testing out, and this is what I'm testing out, because usually once they get the break, and I have to wait for the break first, it pulls back to the 21 EMA and then it goes. But with the ES, once it kind of breaks that range, actually, let me look at this real quick, man. Let me look at that. This is the hourly chart on the ES. I'm pretty sure there's buyers here at 41. There's a lot of buyers at 41. Mm. All right, so technically they broke out the range right here. But then they pushed back in. So we'll see if they hold the 21 and break below. I ain't gonna lie, that would hurt my feelings. You said the break and the retest are not as profitable. Why you say that, Cave Trader? Mm. If this thing fails, that'll be the second time that the ES fake broke down the range from the low. Took the liquidity underneath the range. He said it's not for you. Well, how are you setting it up? What breaks are you looking for? Because with that break and retest, the breaks has to be from a range, an established range. An area of consolidation, basically. If you just take a break of a high, like right here, I mean, this break in this retest, I mean, it worked, but I mean, I guess you would call this a range, but this break and retest worked, and it's about to stop me out. I think the breaks and retests on the Nasdaq is not as consistent as it would be on the break and retest on like ES and gold and stuff like that. So that's the second time that the ES fake broke down to the downside. And traded right back inside the range. The bears were not able to hold that 21 pullback. That's the second time the ES did that. Yeah, the Nasdaq is like, that's what I said about the Nasdaq previously. She does what she wants. There'll be times where she will, if she needs to use the liquidity, like right here is a good example of just having a range. They broke out of the range and they pull back into this range, and then they pull back into this range again. So you just have to find the correct range. And those are where your breaks and your pullbacks will be successful. But if you're just trading like right here, like if you're just trading a high, it's highly unlikely that you'll get a retest of this area because it's just a high. Another good example is like right here, just like a rough range right here. You can reduce it right there. You can see that it breaks out, it pulls back into the range, and then it goes. But it's easy to do that with the Nasdaq in hindsight, obviously. It's easier to do that with the Nasdaq in hindsight because yeah, see, it pulled right back into this range right here. You got a break from a range, a pull back into it, and then they use it as support to push off. All right, so I wonder if we're going to get the same thing that we got yesterday. I wonder if we're just going to get the market trading inside the opening range the entire session. I wonder if that's what we're going to get. Because it seems like if you're not trying to find it. I'm seeing if I can find all right, so that, well, it should already start. Trying to see if I can find Powell testifying to Congress. 'Cause I think he testified to the Senate yesterday, and I think he testifies to Congress today. Hopefully nobody asks him stupid questions about getting their nails done and shit like that, trying to be cute. Because things like nail shops, no matter what the economy is, they're going to make their money. These girls are going to spend the money to make sure that their nails are done. So that was a stupid example. You don't see no nail shops going out of business. Okay. Well, I'll keep an eye out for any live stream. It says. Okay. All right. I mean, I guess it's going to pull back, right? Oof. What do you mean by that, gain weight? You said the playlist is going crazy. Hmm. Yeah, I'll probably start doing that, man. I'll probably start, man. Yeah, I'll probably start.
Leverage ratio standards. But more work needs to be done to ensure capital rules don't choke off access to credit for entrepreneurs and working families. That's why I want to underscore the importance of empowering the newly confirmed Vice Chair of Supervision, Governor Michelle Bowman. Governor Bowman has been a consistent voice for transparency, accountability, and just a plain old-fashioned sanity. I expect her to lead on reform at the Fed, and I expect you as chairman to afford her the same stature as her predecessors. I look forward to hearing from you and your testimony. Ranking Member Warren, you are now recognized.
Thank you very much, Mr. Chairman. When he ran for president, Donald Trump repeatedly promised to lower costs on day one. Those were his words. But since Trump became president, families have been more
Oh my God, this lady is so freaking crazy.
Since January, consumer sentiment
she is crazy,
plummeted.
dude.
Since January, household debt and delinquencies continue to climb. Since January, workers' worries over layoffs have climbed. Since January, businesses big and small have been paralyzed by uncertainty, and they have hit the brakes on investments and hiring. The cause of these problems has been the chaos caused by one person, President Trump. Chaotic trade policies, massive cuts to families' health care coverage to fund tax giveaways to the wealthy, and wholesale deregulation of our financial system that will unleash fraudsters and con men on the middle class. First, trade. Trump continues to play his lose-lose game of red light, green light, red light, green light on tariffs. When this administration slaps tariffs on everything from food to clothing to electronics, working families pay the price. This is bad for the middle class and bad for Main Street. Tariffs like these mean higher prices on essentials. This isn't tax policy. It's economic warfare against the American people. And even when they throw $16 million people off their health care, the Republicans still can't pay for the lavish tax giveaways to billionaires. So instead of just saying that billionaires and billionaire corporations should just pay a little more in taxes, they put the costs of those billionaire tax cuts on the nation's credit card, the national debt. The Republicans plan to run up the national debt by another $4.2 trillion and expect our children
what's up,
and our
Investors E?
grandchildren to pay for it. And finally, deregulation. This administration is systematically dismantling the safeguards that policymakers put in place after the 2008 financial crash to prevent Wall Street from creating another crisis. Less than 2 weeks ago, the Fed board decided to lift Wells Fargo's asset cap. You couldn't even wait until Wells managed to make it one whole year without being caught in a major financial scandal. In just the past 6 months, Wells has been caught and confessed to cheating its customers, cheating its investors, and cheating its workers, the trifecta. For the Fed to give them a gold star and tell Wells it's okay to expand the number of customers.
That's what I was talking about, Alfred. I was like, I'm surprised Wells Fargo's still even exists. They had so much scandal with cheating their customers. I'm surprised
and today,
people still put money in that bank, into their institution.
Where the Fed is expected to vote to lower capital requirements for J.P. Morgan, Goldman Sachs, and the other too big to fail banks. At a time when the economic data are flashing red, these short-sighted changes will increase the likelihood that these mega banks once again tank the economy and then come back here to beg Congress for bailouts when their risky bets go bust. To sum up Trump's economic agenda, it's chaos and pain for the middle class and even more profits for the powerful. American families will face higher costs and new risks to their health care and their bank accounts. Unemployment will tick up and our economic growth will slow. And that's not just me saying this. It is exactly what the Fed's latest economic projections indicate. I hope my Republican colleagues will wake up to the chaos around us. It falls to Congress to stop Trump's trade war and kill this big, ugly bill. And Chair Powell, it falls to you and the Fed board not to pile additional risk onto Trump's existing chaos by dismantling the safeguards that protect American families from another Wall Street meltdown. Thank you, Mr. Chairman.
Thank you, Senator Warren. Today we'll hear from the Chair of the Federal Reserve, Jerome Powell, on the semi-annual monetary policy report to Congress. Chair Powell, thank you for your testimony today, and you have 5 minutes.
Thank you. Chairman Scott, Ranking Member Warren, and other members of the committee, I appreciate the opportunity to present the
since
Federal
2007,
Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and
the longest
stable
account that
prices
I've
for the
had
benefit of the
was
American people.
Bank of
Despite
America,
elevated uncertainty, the economy is in a solid position.
and I opened that thing up when I was in high
Unemployment
school.
rate remains low, and the labor market is at or near maximum employment. Inflation
right,
has come
let's see
down a
what
great
happens
deal,
here on
but has
the
been running somewhat above our
second
2%
break of the
longer run
Nasdaq, or not the Nasdaq, of the
and we are
ES.
attentive to the risks to both sides of our dual mandate. I will review the current economic situation before turning to monetary policy. Incoming data suggests that the
I mean,
economy remains solid.
I don't know, man.
Following growth of 2.5% last year,
We got this
GDP was
200
reported
EMA
to have
right here.
edged down in the first quarter.
I mean, if we
reflecting
do see a
swings in
break
net
of this
exports that
range
were
on the
driven by
ES here,
businesses bringing in imports ahead of
I mean, the
potential
question is
tariffs.
going to be,
This unusual swing has complicated GDP measurement.
how far is this
Private
thing going to
domestic
go?
final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter.
All right, the
Surveys
Nasdaq
of
broke
households
out.
and businesses,
So
however,
what the rules are
reported
is like,
declining
what, you got to wait
sentiment
for the
over recent
pullback?
months and elevated
You got to wait
uncertainty
for the
about the
pullback.
economic outlook,
What I'll do is
largely
actually,
reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged a moderate 124,000 per month, 124,000 per month in the first 5 months of the year. The unemployment rate at 4.2% in May
All right,
remains low and has stayed in a narrow range
we'll see
for
what
the
happens
past
here.
year. Wage growth has continued to moderate while still outpacing inflation.
We got the first break, so we know
Overall,
that
a wide set of
if
indicators
it doesn't
suggest that
continue here,
conditions
it's
in
going
the
to
labor
pull back
market
to at
are
least the
broadly in
21
balance
EMA.
and consistent with maximum
At
employment.
least.
The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal.
Yeah, it
Estimates
definitely
based
could.
on the Consumer Price Index and other data indicate that total PCE in prices rose 2.3% over the 12 months ending in May, and that,
Yeah.
excluding the volatile food and energy
I kind of
categories,
figured,
core
dude,
PCE
I figured,
prices rose
man.
2.6%.
I was thinking to myself, I was like,
Near-term
dude,
measures of
Smith
inflation
hasn't responded
expectations
to me in a
have
while.
moved up over recent months, as reflected
Usually
in
that's
both
a
market
big
and
sign that
survey-based
something
measures.
may have happened. And
Respondents to surveys of
unfortunately,
consumers,
he just
businesses,
sent
and
the
professional
message and say that
forecasters point to
mistakes
tariffs as a driving factor.
were made.
Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal.
Yeah.
Our monetary policy actions are
There you go,
guided by our
Nasdaq.
dual
There you
mandate to
go.
promote
Break that
maximum
orb.
employment
Break
and
that
stable
damn orb
prices
without the
for the
pullback. Go
American
ahead, break
people.
it. Break
With
it.
the labor market at or near maximum
Break
employment
that
and
orb.
inflation
Yeah, that's how
remaining
you do
somewhat
it.
elevated, the Federal Open Market
That's how
Committee
you
has
do it.
maintained the target range
You
for the
said,
federal funds rate at
shit, I don't
4.25
know.
to 4.5% since the beginning of the
I
year.
don't know.
We
He
have
probably did
also
the same shit
continued to
I did
reduce our
yesterday.
holdings of
He
Treasury and
probably was
agency
up
mortgage-backed securities,
and
beginning
he
in
got caught in
April,
his
further
pullback.
slowed the pace of this decline to facilitate
Because
a
the thing,
smooth
it feels
transition
like he's
to
going to keep
ample
going
reserve
up.
balances.
But then it's like, oh yeah, I
We
forgot.
will
Let me pull
continue to
back to
determine the
support
appropriate
for no
stance
damn
of
reason.
monetary policy based on the incoming data, the
After
evolving
shooting up
outlook,
100 points
and
in
the
one
balance of
direction,
risks.
let me just pull back. And then I guess the
Policy changes
pullbacks just
continue
keeps
to
pulling
evolve,
back.
and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and
Yeah,
thus of the
investors eat
related
shit.
economic effects, reached a peak in April and has
This
since
time, that's
declined.
definitely true.
Even so, increases in tariffs this year are likely to push up prices and weigh on economic
Get it at
activity.
that break.
The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will
No,
depend on
NQ
the
is a
size of the
stripper,
tariff
man.
effects, on how long it takes for them
That's exactly
to
what
pass
she is, man.
through fully into prices, and
She's a lady
ultimately
of
on
the
keeping
night.
longer-term
God
inflation
damn.
expectations well anchored.
Well,
The FOMC's obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy rate. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Now,
Yeah, what's up, Santiago?
Keeping us to a pretty strict 5 minutes, as we have a lot of senators who want to and deserve time with the chair of the Fed. So, Senator Rounds, we'll start with you.
Thank you, Mr. Chairman, for the courtesy. Chairman Powell, first of all, let me just touch base on, I'm just curious, a couple of items almost of housekeeping nature. With regard to Wells Fargo.
Dang, he has 5 minutes and he just wasted about 2 of the minutes saying ums and ahs and oohs. You think these people would be more prepared for this?
By all 7 Fed governors, as I recall?
Yes, it was.
Okay, thank you. I really appreciated the chairman bringing up the fact that you have identified reputational risk and have addressed it. I think that was a really important item for the Fed to do, following up on both the OCC and the FDIC's actions. As you know, past Fed materials like the supervision and regulation report often embedded reputational risk within the management component of the CAMELS rating system without clear metrics or accountability. That kind of ambiguity can chill lawful activity and distract from your core mission, monitoring capital, liquidity, and operational resilience. Now that the Fed is moving toward a more objective and disciplined approach to supervision, how will you make sure that this change is fully implemented at the examiner level? And more broadly, what other regulatory updates can we expect?
So on following through on supervision, Vice Chair for Supervision Bowman actually brings an unusual background to this work, and that is that she's a former supervisor. So she speaks that language and
that's what the Nasdaq did to me yesterday.
If anyone can
that's what the Nasdaq did to me.
Have an effective relationship.
She's only filling 6 or 10 of my damn contracts as price literally goes
about that.
So
as we think about things that are
what the hell is that
in the pipeline?
The hell is that?
I'll just point to a few things. Basel III Endgame.
What the hell is that? Dude, that's not even fair. What the fuck?
We're going to be.
That's not even fair.
Actually, voting to put out for comment something on supplemental leverage ratio.
I wouldn't go for a long though.
We're looking at our merger policy.
I wouldn't go for a long until price pushes back up above the 21 EMA.
That we've announced, and
you got price now underneath all the EMAs now. So
the payment of interest on reserves has become a central pillar of the Fed's post-crisis.
You got the medium and short term sloping to the downside. You got a 2-legged pullback. It broke support right here.
Managed to influence the federal funds rate.
We got a rejection off of the 21 EMA.
Ample reserves regime using administered rates like interest on reserves.
The bulls got to show up real quick before I'll go for a long.
Short-term rates. As of February 2025, nearly 19%
but yeah, yesterday it was a wild ride yesterday. Price literally did this. It would do this, go above my my limit, only fill 10 out of a 90 position contract, a 90 contract position, and then proceeds to move away from it.
And if interest on reserves were eliminated, what would be the impact that would have on the Fed's ability to unwind its balance sheet and manage policy rates?
So we're in an ample reserve framework now, and that's a good thing. That's a result of the global financial crisis and the desire.
And Santiago, I'm so glad that you said that. See, gain weight. I wasn't the only person that thought about that.
That's a good thing.
I wasn't the only one.
Banks to keep lending.
I'm glad you said that, Santiago. So Santiago, we had a conversation earlier today. So apparently, when we go to a new contract, the all-time high changes for that new contract.
Would not save
so just to kind of
illusion that it would save money. That is not
just kind of give an example of what I'm talking about.
And it would also not make credit more available. This
that 425 is the all-time high on the continuous contract right now.
Ample reserves,
but
make sure that banks will be able to
on the September contract for Nasdaq. All-time high is at 22,871.
A policy choice which could be executed, but it would take years.
Yeah, the all-time high right now on this contract is 22,871. So it hasn't touched all-time highs on the September contract. If you go to the December contract, its all-time high is at like 23K.
In your opening statement, but Would you talk a little bit about just exactly what's going on with your building? When you have that type of an overrun on the prices and you're talking about billions of dollars in
Yeah, right
costs,
now the December
I think it's
contract is
appropriate
trading
for you
at
to be able to explain to the committee exactly what's going on.
22,728.
Would you take a few
As
minutes,
crazy
please,
as
and
that
explain
sounds,
what's
right?
going on with the value
And
of
the
that
all-time
building
high on
and
this
why the costs
is
seem to be so exorbitant?
23,008.
I'd be glad to if I can have that time. So
Please.
thank you for the letter we received late yesterday. We will provide a much more detailed response, but
Yeah, I know.
just
Crazy.
generally, I would just say we do take
Yeah,
seriously
that is
our
crazy. So,
responsibility
yeah.
as stewards of the public's money. And the other thing I would
I
start with
definitely
is
learned something today.
no one in
Because
office
honestly,
wants
I was
to
under the
do a
assumption
major
that
renovation of a
we would be
historic
going
building
off of
during
the
their term
old
in office. Much
all-time
prefer
high
to
on a
leave that to
previous
your
contract, but
successors.
I guess that's not
And
how
this is a
futures
great
work.
example why, let alone
It makes
two
sense when you think
historic
about it.
buildings that needed a lot of work. But we
It is the
decided to take
future
it on
price
because honestly,
of the asset. It is the
when I
future
was the
price.
administrative governor before I became chair, I came to
All right, so we
understand how
finally got a
badly the
full
Eccles
position
building really
size.
needed a serious renovation. It never had one. It was not really safe, and it was not waterproof and that kind of thing. So we took it on. I would start by I would also say that the media reports that you accurately quoted, they're misleading and inaccurate in many, many respects. And I would just point to, there's no VPI dining room. There's no new marble. We took down the old marble. We're putting it back up. We'll have to use new marble where some of the old marble broke, but there's no new, there are no special elevators. They're old elevators that have been there. There are no new water features. There's no beehives, and there's no roof terrace gardens. Other than that, so all of the sort of inflammatory things that the media carried are either not in the current plan or just inaccurate. So, but it was notwithstanding that, the cost overruns
Honestly,
are what
I don't
they
know
are.
where
So
I
let me
would.
just say on that.
Well, we're well over the 5-minute mark. I'm happy to give you time to talk about that. I'm happy that there are no beehives in there, but we're going to figure out what they are anyways. Senator Warren.
Thank you, Mr.
Thank you,
Chairman.
Mr. Chairman.
Thank you. So, Chair Powell, the Fed released its
Hmm.
updated economic projections last week.
Yeah, I don't know
appreciate
where
your
the market wants to
summary,
go,
but I
honestly.
want to look at the trend lines here. The Fed's outlook on inflation, the labor market, and GDP growth have all gotten worse. Compared to your economic projections in December, the latest numbers show that the Fed is now projecting higher inflation from 2.5% in December now to 3.1%. Higher unemployment from 4.3% to 4.5%. Lower economic growth from 2.1% projected just 6 months ago to 1.4% that you're now projecting. Chair Powell, what has changed in the last 6 months that has caused the Fed to forecast substantially higher inflation, somewhat higher unemployment, and lower economic growth than you did in December?
So some of it is just taking signal
Well,
from data reports that we've seen. Some of it is people
all right.
working
I
in
mean,
the
that's good.
possible effects in the short term of
It's
tariffs.
just the
We have no
ES is
view on the
underperforming
wisdom
as
or
per
the longer
usual,
term effects of trade
but
policy. It's not our
we got a
job. And
decent
by the way, I should add,
range
our
break on
forecasts
both
are generally, and in this
the
case,
ES
are
and
very,
the
very similar
Nasdaq.
to what outside
Uh,
forecasters
I
are
understand
calling.
that. I'm just using you as the gold standard here. I know it's consistent. But you mentioned tariffs as one of the things that has changed over the last 6 months.
And
You
this
know,
is why I can't trade the
Donald Trump has
Nasdaq
become
and funded
president and the
accounts
economy
anymore.
has headed
I don't
down.
even know where to
Not
take
only
profits at.
does the Fed
I
data
don't know
now
where to
show
take profits
slower
at
growth and higher prices this year,
because as soon as I get
it
into a
sees
position,
slower growth and
I
higher
see my
prices
P&L
over the
grow.
next 2
It's
years
like, oh
as
shit,
well.
this thing
And the
can go
Fed
down
sees
further.
no
How far can it
longer-term
go?
boost to the economy
I'm not
or
even thinking
drop
about
in
taking
inflation. In
profits.
other words, no upside to Trump's chaotic tariff war or his other economic policies. So let's talk for just a minute about what's under the hood of the Fed's economic forecast. Chair Powell, I know a lot of different factors influence the trajectory of interest rates. Is one of those factors how quickly the federal debt grows relative to the growth in the economy?
Not
So you don't trust it
directly,
yet?
no. We don't look at that as a factor that helps us set monetary policy.
So you're not watching the ratio between the amount of the federal debt and the growth in the economy? How
No.
fast the debt is growing and how fast the economy is growing? I think I have quotes from you saying last year, quote, we don't need to pay the debt down. We don't need to balance the budget. We just need the economy to grow faster than the debt. Are you saying something different from that now?
No, when asked and pressed, I pretty much always say the same thing as my predecessors, which is that we're on an unsustainable path. I would not say, though, that I will say this, we do not look at federal financial policy and deficits as something that affects our month-to-month monetary policy decisions.
I'm trying to get the overall projection of what happens in the economy. So, for example, I think you have made the point that if we spend on things like childcare that can boost labor participation and GDP, that may be a time when you offset the debt that you incur to do that. But if there aren't investments like that, and we are simply running up the debt, what's the impact of increasing the national debt? So I understand that you don't comment on fiscal policy, but it does affect your job, which is keeping inflation under control and also maximizing employment. If certain policies would materially drive up the national debt and increase the debt to GDP ratio over time, could that make it more likely that we would see inflation, all else being equal?
I mean, theoretically, sure, fiscal policy can add to inflation, but that's, again, that's really not something we comment on. We try to stay away from fiscal policy.
I understand you don't comment on it, but I do appreciate your acknowledgement of the math here. You know, the Joint Committee on Taxation projects the one big, beautiful bill would increase federal deficits by $4.2 trillion.
Oh, you heard what she said?
According to analysis,
you heard what she said? She's gonna probably make a social media tweet about that later on today. I made a mistake. I misspoke. I called the big ugly bill the big beautiful bill by its actual name. I would think it's highly. I think it would be highly hilarious if that post comes out later on today. It just shows that they don't believe what the hell they're saying. They're just saying that shit because their voter base does.
It should be for investments that Americans need, like investments in childcare or housing or healthcare that would actually boost economic growth and lower costs. America should not take away healthcare from millions of people who need it and then borrow trillions of dollars just so that a handful of billionaires and giant corporations can get even richer. Thank you, Mr. Chairman.
Yes, ma'am. Chair, banks are facing a record number of regulations. Small community banks are especially burdened by compliance costs. Bank capital requirements should also be appropriately calibrated so banks are not forced to park capital on the sidelines.
Yeah, somebody's going to,
access to capital.
Someone's definitely going to point that out to her later on today.
I was pleased to see that
you called it the big beautiful bill. You know that, right? Oh, shit.
Leverage ratio. The SLR.
You're not supposed to do that.
To act as a backstop to risk-based capital requirements, but too often the SLR acts as a binding requirement for U.S. banks. Would you agree that adjusting
if she comes in to work the next day missing a pinky, we all know what happened.
To invest more in treasury markets,
and we all know what happens if she comes missing a pinky.
Beneficial to families and businesses across the country.
I would agree. Yes.
Do you agree with so Vice Chair Supervision Bowman recently acknowledged that regulators tend to review individual elements of the capital framework in isolation without considering whether proposed changes are sensible in the aggregate and contribute to a capital framework.
But Santiago said that there's a potential 50 setup coming up. Where's the 50 level at?
And how are you looking at the capital framework holistically to ensure that the Fed is not stifling economic growth?
Well, we're looking at basically the two big pieces now are Basel III and the leverage ratio. And I'm pretty confident we'll move on both of those in the relatively near future. And they fit together, as we discussed. The leverage ratio was always supposed to be a backstop rather than the binding. We want risk-based capital to be the binding capital requirement. So that's how those two pieces work
what
together.
The fuck was even?
And as we look at a reintroduction of Basel III, if you're thinking about the bones of Basel III.
The Nasdaq is nasty, dude.
Over the last several years, we talked about this on
the
Monday.
Nasdaq is super nasty for that.
We've heard
that is nasty. That's nasty work on the Nasdaq right there.
About right.
We all know who's short right here and just got stopped out. We all know.
As you look at Basel III,
who just got stopped out with that wig? God damn.
What do you forecast?
Well, we very
We
much
all
look
know who
forward to
just got
working
stopped
with our
out.
colleagues at the OCC and the FDIC on Basel III and
God, the Nasdaq is
And,
nasty, man.
I would agree. We're gonna take a fresh start at that. You know, the last proposal was actually well above Basel minimums. That's the
So
thing.
that was a
It was the
17-point
ways in
wick
which it was
on the
gold-plated,
Nasdaq.
as we say,
From the 50
rather
EMA
than the Basel
to
requirements,
about
which were very
R3.
significantly exceeded.
Just giving us an opportunity to go back to the spending at the Fed for the construction, and you said that the items that were listed are not happening. I will say
I mean,
that
honestly,
National
the way
Capital
that this thing
Planning
is
Commission
looking,
website, ncpc.gov, anyone can take a look at it for themselves, not just looking or listening to the New York Post,
the way
not
this
just
thing
the
is
Wall Street
looking,
Journal,
it
but
does look like it wants
page
to.
129
Actually,
of
oh
the final
shit! I just,
plans
oh crap.
reflected rooftop
crap.
garden terraces.
Uh,
Page 127 and 129
I just
were where we
realized
found
it.
the
I just saw
ornate
it.
water features
I just
and
saw it.
final plans.
I'm
and new
going long.
elevators
I
that
just saw it.
drop board members off at the VIP dining suite was page 37 of the
I
final
just saw it.
plans. The white marble was pages 40, 41, 65 of the final plans. I would welcome your staff coming in to walk my staff through what is happening there, as opposed to what we not only read in the New York Post, not only in the Wall Street Journal, but also at the National Capital Planning Commission's website. So we would welcome that opportunity to have a.
Can I just
Sir,
quickly
certainly.
say, some of those are just flatly misleading. The
Sure.
idea of elevators, you know, it's the same elevator. It's been there since the building was built.
Janeway says,
So that's a
"No, don't."
mischaracterization. And some of those
I
are no
just saw
longer in
it.
the plans. They've, you know, that's
Just saw
earlier.
it.
The
Right
plans have
there.
continued to evolve.
That was
That
one of
shit's
the-
about
one
to
of the
go
questions I
long.
asked my staff before having the conversation with you in
Just saw it.
preparation, and assuming that your response would be to refute some of the things that were happening, was to ask the question, well, since the articles came out in April, have the plans changed since April as a result of the media attention to it, or was that just never in the plan?
We definitely got a trend line break.
I would just say that having an understanding, a clear understanding of what's going to be and when it changed would be helpful for us. I will note that having confidence in what we hear is incredibly important, and I would give you the opportunity to bring your team in and or send your team over so that we can have that conversation. That would be helpful.
Look forward to doing that. And if you'll allow me to say one more sentence, none of those things were the cost drivers. You know, the real thing is what were the cost drivers that caused the spending to increase, and we have those too, but those are not the things that did that.
Well, I don't want
We
to
look forward to the conversation.
I don't want to eat into Bernie Moreno's time because he's kind of cranky when I do. I would just suggest that when I hear that things are completely and wholly inaccurate, and then I hear that they weren't quite the way they were, those are two very different framings of the conversation. And I only read page 129, 127 through 129, page 37, page 40, 41, page 65, page 129, because I could be wrong without any question, but I don't want to be misled. That's different. Next would be Senator Reed.
Thank you very much, Mr. Chairman, and thank you, Chairman Powell. Many times you've been asked about the status of Fed independence from the president, his constant harangues about interest rate policy, et cetera. But over the past year, we've also seen judicial pressure on the Federal Reserve's independence. The Chevron case, which dramatically eliminated the deference to agency decision-making, also extended the statute of limitations on the Administrative Procedure Act. And there is a strong sense that they're about to overturn Humphrey's executor case, which will eliminate the independence of practically all agencies. What's your judgment on the cumulative effect of these judicial actions with respect to the Federal Reserve's ability to do its job?
I mean, the net effect of all of those will be to make courts substantially less deferential to agency decisions. And so that's just the new world we live in. We'll continue to do our jobs, and obviously we'll respect the law as it is. That is the way the law has been evolving, though.
But there is increasing pressure on
So I was up 30 points before this thing got
Do
sucked
you
back into
believe
the
that
opening
if
range.
Humphrey's executive
So I was up
case
30
is
points.
decided in
I
a
guess
way
that's
that
respectable, I
gives
guess.
the
I mean,
White
we was
House
up
more
like what, $4,000 or
additional authority, that'll
$5,000 at
be
one point.
invoked against the Federal Reserve?
I mean, would you call that a win?
I'd rather not speculate, if I may, Senator.
That's quite all right.
Would you call that a win? I mean, my
the US
target would have
dollar.
got hit,
I remember when the phrase
but
was sound as a dollar.
because I have a 36-point
That
target and
phrase
it comes
getting
down
less used
after
these days.
27 points or something like
In
that, and it
fact,
starts to
Bloomberg
trail.
reported last
So
week
my
that
target
foreign
would have gotten
companies had
hit.
demanded to be paid not in U.S. dollars, but in euros or Chinese
But is that a win?
renminbi.
Would we call this a successful
First,
or
what
breakdown
benefits
to
does
the?
a strong dollar have
Because I
for us?
mean, it was a
And,
scalp. I mean, it wasn't necessarily the direction
how will we
the
suffer
market is
if
trading
the
in.
dollar is
But I mean, we did
no
get the
longer
breakdown.
considered to be
I don't know if we can call
the
that a win.
currency of world record?
I
So
honestly,
there are
I
enormous
don't,
benefits to
I don't
having the
think that as a
dollar
win.
be the most important
But
reserve currency in
technically,
the
we
world.
were
It
we was
remains
up
such,
30 points.
and
So
for very long standing and
from the entry.
continuing reasons, which is, our rule of law, our democratic institutions, our commitment to price stability, our open capital markets, all of those things remain intact. And
Yeah, I don't think that's a win. It doesn't feel
being the
like a
reserve
win.
currency doesn't last
It
forever,
doesn't
but
feel
it's
like a
quite
win
a
at all.
durable equilibrium, and I suspect that we will be the world's
What do you
reserve
think, Cave
currency
Trader?
for a
Would you
long
call
time
that a
to
win?
come.
But you're seeing
Like I said, my target would have got hit.
indications
I mean, it
that,
would have got hit. But
confidence in our currency is
I guess why it
eroding in
doesn't
some
feel like a
places.
win to me is
That
because
those
I wouldn't
even
say
though
that. I think
my
it's,
target would have gotten hit,
this is a
the
very
market kind of did
fundamental,
come back. It
kind
wasn't
of
the direction
foundational
that the
aspect of the
market
global financial system
traded
is the
in.
role of
It
the dollar.
just broke down and came right back
Markets
into the
move around,
range. So
markets are digesting.
that's why it doesn't feel like a win at all.
Information that's sometimes very challenging to digest. I'd be very reluctant to come to any longer run conclusions about things that
Well, it's not
fundamental
about trading
this
it right.
quickly.
Actually, no.
well,
The
I
Nasdaq,
would
we did trade the
suggest,
Nasdaq
and I
right.
know you will.
It was the
keep an eye
ES
on
that we didn't wait for.
going forward. One
Oh,
of
we
the
traded
things
the
you made
Nasdaq
very
right.
clear is that income inequality and
We definitely
lower
traded the
rates of
Nasdaq right. It was the
economic
ES we didn't wait
mobility
for.
are two of our biggest challenges.
Because we waited for the
And,
break. I
you've
attached
also
my limit to
indicated
the
that this is
21
probably
EMA,
beyond the ambit of the
and
Fed in
it
terms of
broke.
dealing with
It
this.
pulled
These are
back to
more
the 21
legislative
EMA,
issues.
and this is where we got this drop.
And I
So
would
we definitely
concur.
traded the Nasdaq
So I
right.
was disheartened to read a report from
It
the
doesn't feel like a
Congressional
win
Budget
because it's not the
Office, which is
direction
an
that the market.
independent
I guess
agency,
what I was thinking.
that the
I guess what I
recently
was
House
expecting was a
passed
bigger move to the
reconciliation
downside.
bill will
Hold on, give me a
take
second. Give me a
approximately
second.
$1,600 per year from the lowest income Americans and give approximately $12,000 to the wealthiest Americans. That seems to be directly contradictory to a society who's committed to raising the income and opportunities and increasing upward mobility. Do you think that's a fair estimate?
I don't know, and I'd be very reluctant to comment on the reconciliation bill, even indirectly.
Well, your wisdom and sagacity has preserved you, and I hope it continues to do so. I must commend you finally. By 2 or 3 years ago, everyone around here was predicting or guessing how deep the recession would be.
You said that how
And
you think that
because of
you
your
would trade the
leadership
orb?
at the Fed and other policies,
How you would trade the orb?
we've avoided a recession. In
Cave
fact,
Trader, is that what
until
you're asking me?
recently, we've been growing faster than every other economy in the year, and you deserve
And
credit
yeah,
for that.
Santiago. Honestly, that's exactly what I
Just
would expect
reiterate
as
my
well.
opening comments for those who may not have
I
been
would
there when
expect
made
that
the
as well.
comments that Chair Powell has a hard out today. Therefore, I'm going to do my best to keep us at 5 minutes. Senator Kennedy.
Thank you, Mr. Chairman. Thank you, Mr. Chairman. Mr. Chairman, did I understand you to say that the reconciliation bill is the most extraordinary legislation you've ever seen? Did I hear that correctly?
There may have been some lost in translation
I
there.
understand. I was a little late. Tell me what tell me what the bond market's telling you.
Bond market's fine now, functioning well. It's pricing, it's reacting to economic news. There's adequate liquidity. Rates have come down pretty significantly from where they were a couple months ago. So I think it's I think inflation expectations have come down a bit from April, and in general, the bond market is functioning well.
Okay. Explain to me why we have seen in the last few months weakness in the dollar.
That's a great question. And of course, the Treasury Department has the job is responsible for the role of the dollar. So I don't know. I think I would go back to the thought that markets have been digesting an unusually challenging set of circumstances, and have reacted the way they've reacted. The dollar's kind of stabilized now. In fact, it's moved back up here in the last couple of weeks a bit. There are plenty of people who are still writing that the dollar is still overvalued. We don't have a view on that, of course, but I wouldn't really have an opinion on exactly why it is where it is.
Well, clearly there's a lot of geopolitical risk right now, which would lead one to conclude, all things being equal, that people would be flocking to the dollar and it would be stronger.
Well, you have seen some of that here in the last few days. But again, I don't really have an official view I'd like to share on that. I think there are possible explanations, multiple possible explanations. Again, one of which is that some people still feel the dollar is highly valued. Yeah. But we'll see.
I want to talk for a few minutes about tariffs and inflation. What does history tell us about tariffs and its impact on inflation or deflation?
So the thing is, we've been through a long period in which tariffs were going down. Remember, since World War II, really, it's been a process of lowering tariffs globally. So there just isn't a lot of modern learning on that. I think people look at the incidence of tariffs during the president's first term, but those were like 1/6 the size of what's people are estimating now. And they do find some effects on inflation. But remember, in 2019, when those tariffs were put into place, the economy was slowing. We actually cut rates 3 times. Inflation was running at 1.5%. So it was a very different time. This is different. I think one of the reasons why it's so challenging is that there really isn't a modern precedent. Yeah. And I think we have to be humble about our estimates. And we are very open to the possibility that transmission through into inflation will be less than we think, or maybe more than we think, which is why we're in a position of wanting to take our time and make a smart decision as we see how this unfolds.
Well, obviously, the size of the tariffs makes a difference, does it not?
It does.
And we don't know yet the size of the tariffs.
We don't. And we don't have a view on any of the merits at all. That's not our job. Our job is inflation, as you know, and maximum employment.
Will it also matter? Let's assume that there is upward price pressure.
Damn, dude. That's crazy.
Would it matter how much
That's crazy.
businesses decide to pass on versus just eat? Does that make sense?
Well,
Yes,
rest in
that
peace
matters.
to any
That is
short
what
orbiters
matters.
out there.
The question is, who's
Any
going to pay
short
for the
orbiters
tariffs?
out there, rest
Originally,
in
it's the
peace.
importer, but it gets passed along through the distribution chain to
I
some
think
extent
moving
to the
forward, I
consumer.
think I'm only
The
going to
ultimate
take.
question of it is how
I
much
think
of it
I'm only
does
going to
show
take
up
the
in
long
inflation.
orb because the short
And
orbs don't work.
honestly, it's very hard to predict that in advance. So
Well, I
we're
guess we
watching
are
to
in a bull
see,
market, so I
what
think
shows
that's just
up
a
in
piece of
measured
context
inflation.
that I'm just going to have to pay attention to.
If
We are in
the
a bull
President's trade
market.
negotiators
We're not.
pursue reciprocity, which I define
We had a
as both
bullish move.
sides reducing, in a quid pro quo, reducing tariffs
I
and
guess
trade
technically it
barriers
did
as
kind of
much
come
as
back into
possible.
this area right here.
Ideally, in a perfect world,
Technically, it's a little small little
we would end up with two
consolidation area.
sides
This
with
range.
zero tariffs and zero trade barrier. Would that be inflationary?
We do
No,
have
not
all
at
this
all.
room for
That
upside
would
right here.
cause the economy to roar, wouldn't it?
I think it would be.
Yeah.
And
Okay,
it would-
thank you, Mr. Chairman. I appreciate your endorsement, Mr. Chairman, of the reconciliation bill.
Senator Warner.
Thank you, Mr. Chairman. Funny, Senator Kennedy, I didn't interpret his comments that same way.
Oh,
I would also say that, one, thank you, and we echo what Senator Reed said, thank you for your independence and doing the job.
All right, so let's see how far this leg is going to
I
go.
think tariffs are a tax and they're going to hit. I think
Good
starting
thing I
next quarter,
noticed that trend line.
and
Honestly, good
again,
thing
I
that
think reciprocity argument, that would be a nice goal. I guess.
I think I noticed that
hope we
trend
can then
line.
explain to
right
the
there.
Australians who
You can see that the market
strong
literally
ally of
bounced
ours,
right at the bottom of that trend
who we
line.
have a free trade agreement, so we
It
don't have
literally bounced right
tariffs,
there.
who we have a trade surplus with,
Literally bounced right there
who I'm hoping we're going to be able to build jointly submarines,
at
while
that trend line.
they, with all those things, still got whacked with a 10% tariff. Doesn't seem rational or logical to me. But let me get to, I've been very concerned
Give me a
about
second.
some of the Trump administration's, I think, mismanagement of the federal workforce. I can tell you some of the DOGE approach in the national security and intel world. Cuts are having dramatic effects. But today I want to mention something that frankly doesn't get a lot of attention, a very small entity, the Bureau of Labor Statistics. U.S. economic data, which has always been independent, it's really been viewed as the gold standard across the globe. And frankly, the BLS data often is the guidepost that investors use regularly. BLS helps us get information about cost of living increases, policy making for you guys. It's used to adjust payments on the roughly $2 trillion in Treasury bonds. The truth is that the BLS data shouldn't be degraded on any basis. Yet, the administration is so dramatically, and I hope my Republican colleagues will hear on this, cut back the staffing at BLS, that the BLS has had
All right.
to significantly cut back
So I guess if
on the collection of critical price and inflation.
so I guess if you kind
Normally,
of bought at the bottom of this trend line,
BLS staff, when you don't have all the data collected,
482
will estimate
to
about 10% of the
524,
inputs into the CPI.
524
these
minus
cutbacks,
42.
They've had to estimate close to 30% of the data. That means faultier data.
That's not even better.
How can we grapple with this, and what does the undermining and staffing shortages at a BLS mean in terms of your ability at the Fed to do your job?
You know, we can still do our job. I would not want anyone to think that the data have deteriorated to a point where it's difficult for us to understand the economy as well as we can understand
Yeah,
it, which is
I
not
figured as much,
perfectly.
Santiago.
But the direction of travel is concerning.
I guess we just have to use that as
The US
context.
has been a leader globally in
We just got to use that as context.
investing in how to measure the output of a modern economy, which is something that we've led the world in for a long time. And it really helps not just policymakers, but also businesses. If we have accurate information about what's going on in the economy, you're making decisions based on that economy, not just the Fed, not just you, but private companies as well. So I think it's I think it's something we should continue to invest in. And I don't like to see any deterioration in the public data, which has been the gold standard. The
54 ticks
BLS,
would
Bureau of
be,
Labor Statistics, and
that's like
others have really
13
been
points on the NASDAQ.
the bedrock that people really do look to as
I don't
solid
know what,
data that tell
hold on,
us
is this a 1 minute
do
chart?
Collect this input. Who
Is this
do
a
some
1
of
minute
this
chart?
analysis. They are experts. They are not fungible. You fired one and
Because
hired another. There's an expertise here that has been
at least the past couple of
being
days,
undermined. And again, you just look at the
yeah,
fact
the
that you have
NASDAQ's
to
been pulling back
do
way
your
more
estimates
than
move up
13
from
points.
about 10% estimate to a 30% estimate. That is not good.
And she's been
for
faking
the
out
markets. Let me move to
a
one
lot
other
more.
topic in my
I
last
think
minute.
kind of like what everybody's
Stress
saying.
tests,
I do think
really
it's just
important.
because
Those of us who were involved in Dodd-Frank,
Powell was
really important
testifying
as
to
we try to
Congress
think about
today
the most
and
significant
yesterday and
banks.
today.
But there has been concern. I've shared some of this concern.
But there's
that
always going to be some
the
news.
stress test
I
process
think with
was
all
so
this
opaque,
Iran stuff and Powell and everything
that
else,
while
I
the
mean, the price
regulators
action is going to
may
be a little
fully
wonky,
have
but
understood, sometimes
I mean, for the
very
most
banks being
part,
regulated
if the
didn't
strategy
understand fully
works,
the
it's
criteria.
supposed to
I know
work
you're
in
taking
any
a look
weather,
at how we can bring more
in any
transparency to the
situation, because
process.
there's always going to
When do
be
you think we'll
news.
see
There's
that,
always
and what
going to be
kind of changes do you
something.
think we'll make?
Well, later this year, we've said that we're going to fully disclose the models, and
So
that's
it's
the
going to be
main thing.
something.
If you're
So, I
gonna
mean,
set-
I try not to
it's like the
think
IRS,
like,
if
yeah,
you're
just
gonna
because Powell's
charge
talking,
people
blah,
taxes,
blah,
you have
blah.
to have the
This is
transparency
why
about what
this
that
is
is. It's
happening,
gonna
and
be
this
the
is why
same as
that
that.
is
We're going to
happening.
show how
If
the
it's supposed to work, it's
calculations
going to
are
work.
made, and we're working on all that right now. We're also going to.
It just
we
seems
have
like,
a proposal out to sort of
wow, did
smooth
someone
the
just burp?
results of the
Did you
tests
just burp in the
from
mic
year
like
to
that?
year. So this is something
But
we're working on hard and expect to.
it just seems like for whatever reason, the market has just been
important progress later this
yesterday
year
and
when we begin to
today
publish the
has just
models.
been hanging
I'm
around the
anxious to see it. Thank
opening
you, Mr. Chairman.
range.
Senator Ricketts. Yes, sir.
Thank you, Mr. Chairman. as we were talking about tariffs a little bit earlier, the senator from Virginia talked about Australia. I will point out that Australia has, well, we bought about $28 billion worth of Australian beef, and they've bought exactly 0 of ours. So there's an opportunity to be able to improve that trade relationship. So that's one of the things I hope will come out of the trade
You
negotiations.
will acknowledge there is, though, we actually have a trade
We actually have a
surplus.
trade surplus with Australia, that is correct, but we'd like to sell more beef to them. So that's an opportunity. But one quick question on that, kind of just following up on Senator Kennedy's line of questioning. So if a tariff was put in place and the prices went up, wouldn't that be a one-time event, right? Because after that, it would be baked in. It's just a one-time thing.
So it might well be, as I indicated in my opening remarks, it might well be a one-time event, but that isn't a law of nature. You know, we would want to make sure of that. We were more sure of that back in 2018 because we'd had, 40 years of low inflation. Coming off of a global inflation episode where we haven't fully returned to 2%, it's something that's a question we will approach carefully.
But if the tariff is only put in once and just maintains the flat rate there, then how could that be inflationary in the second year?
Well, because it could be a process of many years. I mean, that's a couple of things are. One is if it comes in quickly and it's over and done, then yes, very likely it's a one-time thing, like an oil shock, a one-time oil shock where the price comes back down, it goes through the system. It doesn't raise inflation, just raises prices once. But if you have a process that goes on multiple shocks for years, for example, or if the shocks are very large, that kind of thing. And I think, again, we have to be conscious of the current situation, which is people haven't seen 2%
I mean, that does
flat
make sense, man.
inflation for some years
that does
now,
make
and it's
sense,
different from what it
because,
was in 2018 when we
if it
had
just
tariffs
pulls back to
earlier,
the
when we actually
EMA,
cut rates.
then that doesn't.
So I'm
Let's
not
just say
saying
pull back to the
we're not
EMA,
reacting
but
at all
if
of
it
this.
breaks
It's just
through it,
it's a risk we feel like
then
as the
yeah,
people
that
who are
does make sense.
supposed to keep stable prices
That
for
does
the
make
benefit of the American people, we need to manage that risk too. That's all we're doing. We're not deciding what to do yet.
So if Senator Warner's comment that a tariff is a tax, would that imply that then taxes could be inflationary as well?
No.
So what's the difference between a tax and a tariff then? Or do you disagree with Senator Warner's characterization that tariffs are not taxes?
I wouldn't disagree with that, but it's not the language I use. Look, this is, as I say, one time could be the base case, but in a situation like this where the process could go on for a long time, where the effects could be large or small, it's just something you want to approach carefully in a world where inflation is not back to 2%. And that's our job. If we make a mistake here, people will pay the cost for a long time. And so we're just approaching the question carefully. That's all we're doing. You know that, a majority of my committee has said that they do expect to cut rates between now and the end of the year in the remaining 4 meetings. So it's not that we're, taking a strong view that it will be inflation and not a one-time cost increase. It's just that we're going to take a careful approach to that very critical question.
Well, let me switch gears on you a little bit. Communist China is our single greatest threat to America's national security and financial independence. Now more than ever, the U.S. must ensure the security of our financial system against Communist China's malign influence. And in 2022, Senate Homeland
Yo,
Security
China
and
be
Government
dropping
Affairs
a lot
Committee
of stuff.
released a
Yo,
report
China
identifying
taking
efforts
over
by
the
Communist China
anime,
operatives to infiltrate the
and
Federal
it's taking
Reserve
over the
System.
gaming
The
industry.
report contained real-life examples of Communist China's attempts and
China has been
tactics
coming out with some
used to target
really great
Federal Reserve
animation.
officials. In late
Really great
January, a
animation.
former senior
Really great
advisor to the
games.
Fed Reserve was arrested on charges that he conspired
Visually,
to
at
steal
least.
Federal Reserve
Don't
trade
know.
secrets to benefit
I
and
don't
advance
necessarily
Communist
care
China's interests. This Wall Street
about
Journal
the
article
story
from
or
May
anything. I
2025
haven't played
details
these
potential
games,
ramifications of his
but
actions. The kind of data and trade
when I
secrets
look
that
at
this Fed Reserve
people
employee
talk about and
shared
review
could
these
allow Communist
games and
China
this
to
anime and
manipulate the
stuff
US
like that,
market and gain advanced knowledge
the
of changes
visuals
to
on
the
these
federal funds
animes
rate.
and games that
It
China's
could
coming
provide
out
Communist
with,
China with an
man, they taking
advantage
over the
when
game.
selling or buying U.S. bonds and
They're
securities.
definitely taking over the game for sure.
Chairman, has the Fed Reserve made any changes to
Japan
strengthen
better
its
watch out,
internal counterintelligence
because if
and
China
security
start
protocols since the
coming out
development
with
of these
great
incidents?
anime and manga and stuff like that,
So that's
and
an
takes the
incident,
attention away from
and
the
I would say we
trillion-dollar
take it very
industry that is
seriously. We have
Japanese anime and
quite
manga,
elaborate and
that might
serious
start a
and
damn war
strict
again
provisions around
between those
staff
two
access
countries.
to information.
Because shit, in my
Serious
opinion, I feel like
protections
that's what's keeping Japan
confidential information. We have
viable.
background
Is
checks, we have
their
annual
anime and
training, we
manga,
have many of those things. I don't know that we've
because
made
they
any
have an
fundamental
Asian
changes,
economy.
but we're certainly
A lot of Asian cultures do that,
sorry, very
where
sorry to
their
see
Asian
something like
economy
this
is
having taken
growing,
place,
but because they have a limit on how many
I mean,
kids
we're certainly looking at
uh,
at the protections we have.
parents
in
can
place.
have,
Great. Well, I have another question. We'll just
Obviously,
put it as a
there's
QFR,
not a
but I
lot
know
of
the chairman said you've got a hard out, so I'll
new
go
people
ahead
coming
and,
into their
yield back my time.
community,
Thank you, Mr. Chairman.
but they're taking
Thank
care of
you.
their older people,
Senator Van Hollen?
which
Thank you, Mr.
I don't know
Chairman,
how
and Chairman
they're going to they
Powell.
plan on moving
good to see
forward
you.
like that. But
I want to
I
start
mean, it's
by
their culture,
acknowledging
and
the
it's
continued
not even my
uptake
place to
of the
even
Fed Now
make
bill
considerations
payment
like that. But
system. I know I've raised the development and rollout of that system
honestly, it
with
doesn't make
you
sense.
in many hearings
But
over
like
many
I said,
years.
it's their
We're
culture.
now about 2 years after launch.
Very
I
similar
wanna
to it's
continue
your
to work
account. You
with
can do whatever
and
the
your
fuck you want to do. But,
colleagues to encourage expanded adoption of the capability and capacity so that customers have real-time access to their money. So I just ask that we continue to work on that together. You agree? I do. I thought you might. Thank you. So I want to ask you about the
oh yeah, you guys, y'all know I'm in the sim,
student
right?
loan situation.
I mean, these
in
profits don't
the
mean
country,
nothing.
And you've talked about
I'm
this
in the
the
sim.
past, and you've talked about how it can be.
I'm not in an eval. I'm not in anything right now. I'm in the sim.
Very high in terms of balances that cannot be paid.
So when I get into the
According to
sim, I'm
New York
not
Fed, student
concerned
loan
about taking
balances grew
profits.
by
I'm just kind of
$16 billion to reach $1.63 trillion
testing stuff out.
in the first quarter of this year.
I
Data
mean,
shows
the
an
injuries
uptick
were
in the
all.
student loan
I mean,
delinquency
aside
rate
from,
overall, the
I
age
think
of
we only had
delinquent
what 2
borrowers
bad
and the
injuries
number
today.
of newly
We
delinquent
had the
borrowers.
break of the 21 EMA right here, which was a bad trade in my opinion. But I kind of wanted to see what happened. But aside from this trade right here, we've had some good trades, man.
Their wages being garnished.
I mean, this was a 30-point trade on the Nasdaq.
In the Senate,
This right here was
President Trump and Republican senators
about a 25-point trade on the Nasdaq.
That would limit affordable loan repayment options.
On the ES, I don't know what the hell the ES is doing.
To responsibly repay their debt and get back
the
on a
ES
path
was a
toward
bad
financial
trade.
health.
This is a bad trade.
So, Mr. Chairman, you said before in your
So yeah, I'm not on when it comes to the orb on the ES.
Negatively impact borrowers'
I think what I'm gonna start doing is whatever the context of the market is, that's the side. If I choose to take it on the ES, that's the side of the market that I'll trade.
Yes, it is. And
it seems like the ES ain't going to break down if it's not going to break down.
Just from a factual perspective about
so you just have to be patient for that breakout if we get it. Because if it does break below the range, it seems like in a bullish environment, it's just going to get sucked right back in.
These borrowers to default. So
I mean, it does make sense, I guess. I mean,
things that aren't Fed policy, but
you got this big giant in this case range right here that the market tapped into and bounced off of.
You know, you can make all kinds of investments and you can discharge if you can't pay back the loan, you can discharge it in bankruptcy.
I'm in the sim, so
one
these profits
exception
don't
we
mean
make
nothing.
is student loans. And I ask whether that is wise national policy. People borrow to invest in their education. That we do not forgive. It seems like something for Congress to consider. That's all. It's none of the Fed's business, really.
Honestly,
Ultimately,
Alfred,
it's not a big macroeconomic thing. But
what you're saying right now, that is actually the trap.
I appreciate your breaking your own rule before, and I appreciate
that's the trap of that model.
I could not agree with
these
you
prop firms don't want you to know that. They don't want you to be aware of that. That's the trap.
Bankruptcy, the idea that student loan.
That's why they have it. Don't you think it's a coincidence that a lot of these prop firms have that 5-day? You have to make a certain amount until you reach your goal model.
Companies involved in
psychologically. Once you get to that last day, anxiety, like overwhelming anxiety kicks in.
Ranking member, so
because
if
you get it or if you don't, let's just say if you don't, like that constant back and forth, you're telling yourself, you know, if I lose today, you know, it's no big deal. I'll come back the next day. But then the other voice is going to say, yeah, you should get it. And if you don't get it, then you don't know you don't know what you're doing. You suck.
You're an economist,
and you don't know how to trade. It's a constant battle between
across the board.
Being okay if you lose, but at the same time questioning your ability if you don't win.
So surveys
they know what the hell they're doing.
Show very widely that people feel
now a lot of traders. It doesn't affect a lot of traders, but it's going to affect the majority just enough to where people are going to probably lose
back
on that last day.
in
And if they
April,
lose, then
and has come
9
down a
times out
little
of
bit. And
10,
if you talk
they're
to
going to go
businesses,
tilt
I talked to an
because they're going to
unusually large
deviate from
number
their
of
plan.
business people in the last
They're going to try
couple
to
of
get
months,
their money
and
back,
the feeling is a
plus
little better now
the
than it
money
was.
that they
They're
would have
getting
needed
on
to
with
get a
it and
payout.
feeling,
And
you
we all know how
better.
that usually ends up
I'd say surveys are still showing depressed
when we
sentiment,
deviate
but
from
it's
a
moved
winning
up
plan.
from where it was.
It takes
I
a
would
lot
say,
of
Mr.
discipline.
Chairman,
It takes
that may
a
be the
lot
case
of
at this moment, but we all
self-control
know that we could wake up any
to
morning
not
and see
come back
another
in the next
tweet,
session,
and that could change
oversize,
dramatically.
and not blow the account.
So
We know that's
I
easier
appreciate-
said than
I
done.
appreciate
These
your-
prop firms
your
know that
efforts
as well.
to try to do what you can to meet your dual objectives.
That's why they have that
thank you, Mr.
model.
Chairman.
Yes, sir.
And they make that
Senator-
model even
Senator
harder
Lummis.
when
Thank you,
they
Mr. Chairman,
add an
and
extra
thanks,
restriction
Chairman Powell,
that
for
you
being
have
here today.
to
As you know, what
be
always
consistent.
vexes me
That
and
consistency
has
rule
for the
keeps you from
last
over leveraging,
4.5 years
and it keeps you
about,
anxious
the
because
Federal
if
Reserve is the
you can
bank
only make a certain
supervision
amount,
function, as
then you're
opposed
like,
to the
oh man, I had to
monetary
come back an
policy function.
extra day
So I'm going
and
to
make
focus on
more
bank
money. And we all
supervision.
know that
First of all, I do want
even
to
as
thank
I'm
you
saying
and Vice
it, like
Chair,
mentally, as
Mickey
you're
Bowman
probably
for
imagining
ensuring
yourself doing it, you're like, yeah,
reputation
fuck that.
has
I'm
been
going to just get it.
removed from the bank
These prop firms
supervision
know that. And that's why
process.
they all have their models like
It
that.
was very arbitrarily used by those who were
They
supervising.
build up all that anticipation
On
until that
January
last day.
27th, 2023, I'd call it the high watermark for Operation Choke Point 2.0.
Oh, shit.
The Federal Reserve Board, in coordination with President Biden's White House, executed a coordinated
So
attack
Smith sent me back,
to isolate
written
the
me back, and
digital
this is what he
asset
said, man.
industry from
And
the banking system.
so he said that he
And while the
realized his
Fed has taken
mistake
steps
and his
to
negative
adopt a more
tendencies came
balanced
back with a
approach to
vengeance.
digital assets,
This is
which
why now I have a rule
appreciate, the
that when
legacy
I
of
get my funded
January
accounts,
27th, 2023
and all my funded
remains
accounts,
with us
I'm
today.
blocking the
So I'd
Nasdaq.
like you to look at this quote.
I don't know what it is about that bitch, man.
It says,
I don't mind trading the
issuing
Nasdaq in the
tokens on
evals or in
open,
Sims. I don't
and/or
mind it.
decentralized
But when it
networks
comes to
or similar
making money,
systems is highly likely to be
the Nasdaq is just
inconsistent
too
with
dangerous.
safe and sound banking
She's just too dangerous.
practices. So my first
She's
question
too
is, do you
dangerous.
recognize this quote?
Yes, not
She is
super
too
clearly, but yes,
dangerous.
Because it's from the Federal Reserve Board's policy statement on Section 913 of the Federal Reserve Act, which was formally adopted by the board on January 27th, 23. So now, Chairman Powell, I want to show you another statement, and I'm sorry if you can't see it clearly, I'll read it to you. It's from the Genius Act, which just passed the Senate by a vote of 68 to 30 last week. And it takes the opposite position to the board's policy statement on issuing stablecoins on an open, public, distributed ledger. So my question is, what has changed about the risk of stablecoins since the board adopted its policy in 2023? And now that the Congress has weighed in, at least the Senate has weighed in and sent the Genius Act to the House, does the board plan to withdraw the policy statement on Section 913?
So I think what has changed
He
is
said GC and
if you
NQ
go
have all
back,
betrayed
that's
you.
a couple of years ago. That was the period of high-profile failures and fraud and that kind of thing. And what's happened
Bro,
is, I think
I'm not
you know,
trading
the
MNQ
industry
at
is
all.
maturing,
I
our
sent
understanding
Smith
of it
the
is
screenshot.
improving, and in a
I
sense,
blocked the
it's
Nasdaq
becoming much more
on
mainstream.
Tradevate, on
So
my
all of
funded
us are
futures.
revisiting,
I only
you know,
trade
the things that were done
gold.
during that era.
I only trade gold.
And you know, I think the current
The
view
good thing
is
about gold
that,
is my
that
strategy
it's
works so good
appropriate
on
for-
gold
it's always been
because I have
appropriate
so
for
many
banks to choose their
opportunities
customers
to
and
get
be
my
able
money
to
back
undertake
in
activities
gold.
as long as they're safe
I have
and
a
sound.
36.
In terms of
Depending
I
on,
think,
so if
I
I'm
have to get
trading
back to
in
you
an
on
Apex
913. I
account,
think
I give myself 45 more ticks because
it's a
I'm trading
broader
heavier
thing that has
size.
nothing to do with
But
crypto.
in the
but
smaller
that was-
accounts, I
that
only
was a
give
piece
myself
of
a
it.
36
we are
tick
looking
stop.
at and withdrawing
I
many
have
of our pieces of
$12,000
crypto
or
guidance from that
$12,000,
era, though, as you know.
$1,200 in
And I
drawdown.
appreciate that.
And
I hope that by withdrawing
I have 3 opportunities to get my money back before I hit daily
that
loss
you're
limit
also
on gold, which if I lose
instructing
the
and
first one,
admonishing
then I
your
know my
bank's
follow-up trade is
supervisors,
highly likely to not only
when
make my
they're
money back, but
when there are
I'm being profitable because
efforts
my
to,
original entry is going to be at
regulate
supply or demand
banks
anyway.
that
If it
provide
goes a
too
little bit
much,
higher, then that just tells me that,
discretion
okay,
to bank
well, that area
regulators,
of supply wasn't
to
right.
pick winners and
This one
losers from
is going, we're
among
going to probably
the
see a
customer
big crash. And
lists,
that's what
the
usually
loan
happens with gold.
portfolios of banks.
So
It-
my win rate with gold is, I mean, y'all see it on stream
it's
all the time.
antithetical to
I feel like the only
American
time when I take
system of
losing trades
banking.
in gold is when
And I do think
I start
that
being foolish
there was that kind of
and deviating from the
discretion
plan.
unleashed on banks. And
Nasdaq,
it
on the
had
other
a
hand,
negative impact,
shit.
a real chilling impact.
She'll punch you in
on
the face and then you
banks
just
as
start
they
doing shit. You just start
selected,
clicking buttons once she
and
punch you in the
banked
face.
certain industries and then
Okay.
debanked other industries.
Well, the
and
Nasdaq
other
definitely,
people,
the
during
orb on the
last 4
Nasdaq today.
years. So taking the guidance
Well, I mean,
documents
technically, and I guess,
policy statements
man.
out is important,
Yes.
but also guiding the people that there are changes now and that they can no longer use their own subjective biases
490,
towards DEI
25.
and ESG and other things in supervising the banks is also a critical component of bank regulation.
Look at that, dude. Look at that. Look at that. Look at that.
I agree completely. And as you know, Vice Chair Bowman is actually a former bank supervisor, so she's very well placed to make that happen.
And
All right.
I realize
So,
that
again,
she as vice
the
chair
Nasdaq did
is more
what?
directly involved in bank supervision. I hope that you will
You know,
use
what I'm
your
gonna start
role to
doing, because honestly,
punctuate the importance of those
yeah,
changes,
these are sweeps of liquidity.
within the bank supervision
So how I'm going to
function
start
of the Fed.
documenting this
We're gonna have to
is
move on.
Thank you.
instead of calling this a break, because technically a price
you,
did
Mr.
not
Chair.
close underneath.
Good morning. Good morning, Chair Powell, and welcome to the committee. So Chair Powell, a few months ago, you issued a warning about the trajectory of our national debt.
Price
Speaking
did
at a New
not
York Times
close
event, you said
underneath the
US federal
range.
budget
It just
is on
swept the
an
liquidity. And it
unsustainable-
looks like the
US federal
Nasdaq
budget
loves
is on an
sweeping the liquidity
unsustainable path. The
before.
debt is not only
So I
at an
think that actually
unsustainable
might
level,
be
but the
a
path
good
is
strategy right
unsustainable, and
here.
we know that we have to
The
change
Nasdaq
that.
has consistently
Would you still
done
agree
this.
that is true?
Yes, that's the one
So-
thing that I would always say, and that my predecessors have said, and that's the
A
kind of
good
the only
trade
thing we say
probably
with
would
fiscal
be
policy.
Exactly. And
catching
I
a
would agree with
like
that.
once
At
you
a
see
time
the
when
sweep,
Americans are struggling
getting
to
in.
figure out how to afford their lives and have low confidence
Because
in
the
the
orb
economy,
doesn't
to add
just
to the
break
deficit
out,
now, as
or
the
at
Big
least in the
Beautiful
last
Bill
couple of
does,
days, it hasn't
strikes
done
me
that.
as unsustainable. Now,
What it likes
I'm
to
not
do
asking you to
before
moderate between
is to sweep the
Republican and
liquidity, go
Democratic
back into
policy
the range,
differences on,
and then once
the
it
Big
goes back
Beautiful
into
Bill,
the
but would
range,
you
and
agree that the
then
Big Beautiful Bill
you'll get the
adds to
breakout.
deficit based on the data
It
that you've
pulls
seen?
back into the
I'm
range.
just not going to comment on the
It broke out
reconciliation.
again.
Okay.
So this is two failed
I would
breakouts.
just point out to my
It pulled back
colleagues that
into the range,
CBO
and then
says
it
that
finally
adds to the
broke out.
deficit. The Joint Committee on Taxation
All
says
right,
that
so
it
let me,
adds to the deficit. The Yale
right.
Budget Lab says that it adds to the deficit. The Committee for a Responsible Federal Budget
All right,
says
so
that
let's
it adds to
let's
the
do this real
deficit. The
quick.
Penn-Wharton budget model says that it adds to the deficit. And even some of
All
my
right, so
Republican colleagues,
range
Senator
high.
Johnson, Senator Paul, say that it adds to the budget. And as Senator Johnson says, it's wrong and immoral. So I appreciate that you won't comment on any of this, but let me just ask you an economic question. Can you talk a bit about what impact a rising deficit has on our goal of lowering costs for Americans, especially in the Trump tariff environment that we are in right now?
I'm sorry.
What impact does a rising deficit have on our goal of lowering costs for Americans, particularly when we are in this Trump tariff environment, the unpredictability of that?
So I think it's likely that when markets are pricing longer-term Treasury securities, there's something baked into that in the market's thinking about interest rates. What should be the appropriate interest rate? But it's hard to unpack that with any precision.
These are factors that have lots of interplay between one another.
Yes.
Yes. And Chair Powell, could you just comment briefly about the sort of the potential risks of stagflation, where we have slower growth and higher inflation. I know this is something that the Fed guards against, and could you just comment a bit on the risks of that and what it means for regular Americans trying to afford their lives?
So we're not seeing that now.
Yep.
It isn't really the base case that that's what we're going to see. But of course, that's a very difficult thing because, a stagnant economy wants more stimulus, but an economy with more inflation wants less stimulus. So
Right.
it puts the central bank in a hard place. We've warned of it, but it's honestly not something that we're facing or that we expect to face. But it's something we're monitoring is what's happening.
Thank you. I want to follow up on a question I asked you the last time you were before the committee. I asked about the impact of severe weather events, otherwise known as climate change, on home insurance costs. And
Oh
you
my God.
testified that, I think you said, if you fast forward over 10 or 15 years, there are going to be regions of the country where you can't get a mortgage because of the,
They just can't help themselves with these little stupid ass.
The challenges of insurance companies.
They can't help
just not being
themselves.
able to
What does the Fed has to do with climate
provide
change?
that. Since February, when I asked you that question, home insurance rates have continued to climb. A recent analysis about climate risk from First Street found that financial burdens from severe weather are driving up household costs and triggering increased mortgage defaults. Now, it's at about 8% now, but they project that by 2035, 30% of all foreclosure losses would be related to climate impacts, which is like pretty stunning. Now, I realize this is a complicated issue because insurance is regulated primarily at the state level, though there are exceptions. Flood insurance and terrorism insurance are exceptions. But I wonder if you would comment on this. I'm thinking a lot about what impact this has on housing costs, which is a big component of inflation and a place where housing costs are rising higher than the general inflation rate right now.
Many things are driving up housing costs.
Yes, that's true.
It's of course mortgage rates, but it's also zoning costs and things like this for properties that are near the water. Particularly, for example, we spend some time down in Florida. Property insurance just gets more and more and more expensive, and to the point where it also almost makes sense to self-insure, and that's because of just big losses. Companies are just putting that in their models, and they're charging what they need to to charge to make a return. And if they can't get that, then they'll leave that state. So that seems to be what's happening.
I know I'm out of time, Mr. Chair. Thank you.
You're always polite. So,
Minnesota
gave her
Nuts.
22 seconds. Yes. Thank you,
That's why they call me the Velvet Hammer, sir.
I didn't say that you weren't harsh as well. You're nice when you do it. Like just right now. See, Senator Moreno remind me not to give Tina a compliment in the middle of the day.
Chairman Powell, just want to make certain I understand this correctly. Control inflation and maximize employment. That's it. Two things, correct?
Yes.
So let's take one at a time. Maximize employment. Do you care if every American makes minimum wage or makes a livable wage? Is that something that factors into your thought process? In other words, we have full employment, but most Americans are on substandard wages. Does that change your calculus?
Does it change my what?
Calculus. In other words, full employment is full employment. Every American has a job, but they're making minimum wage versus having a family sustaining wage. Does that matter to the Federal Reserve?
It would matter to the country a lot.
I'm saying, does it matter to the Federal Reserve when you're making your decision?
Honestly, we don't really have the tools to affect that.
Right. So it doesn't factor in. Now that's different than us. The people of this country elect us to make certain that their wages are higher than inflation. And by the way, the records
All right, give me a second, okay,
that real
Trader.
wages
Give me a
are up
second.
this year. So we've done that, not the Federal Reserve. Second piece of it is, let's talk about inflation first.
Well, we've helped control inflation, which is part of that.
We're going to jump right into the inflation conversation. There's different kinds of inflation. There's different causes. There's not witnesses to inflation. There's key actors to inflation. Would you agree?
Sure.
All right, man.
So let's talk about the actors. Did you
All right.
comment during COVID lockdowns that was a bad idea, meaning that you're shutting down the entire economy? It's not a button. I hit the button, you can hear me. It's on and off. COVID wasn't that. We just shut down the economy. Any comments on that?
Of course not.
Okay, so you didn't comment on that. Vaccine mandates, something that my Democrat colleagues loved. If you don't get the vaccine, you're a terrible human being. You can't go to work. In fact, Joe Biden was overruled by the Supreme Court because he said that if you work in a company with more than 100 employees and you don't get vaccinated, the company has the ability to fire you, unless you prove that you're negative on COVID. That obviously is a supply chain shock, wouldn't you agree? If I'm running an assembly line and now I have to put my people 6 feet apart and now I have people quitting or not coming to work or I have to fire them, that's a supply chain shock, wouldn't you agree?
I mean, it's a medical thing that you
No,
take.
but it's a supply chain shock.
George
I'm
Washington.
not asking you to make a medical decision. I'm asking you to make a Fed decision on inflation.
Way outside anything we would comment.
But it affects inflation because supply.
It didn't, in
Are you,
fact.
are you, wait, are you saying that supply
Didn't.
chain shocks don't affect inflation?
They do, but that
Okay, they do.
didn't.
So that's clearly one. If you ban the export of liquid natural gas, which is going to cause the commodity price to go up, would that supply shock not also cause inflation?
Potentially could.
Yeah. So, and now the ranking member loves to talk about billionaire corporations, that are going to get away with paying taxes, right? Who pays corporate taxes? Like, who pays it? Is it like some obscure Wizard of Oz character behind the curtain that is a corporate entity that pays taxes? Who pays taxes?
I mean, ultimately, it's shareholders and customers.
So it'd be, I'm going to read you a line. You tell me this is accurate. On taxes, it's not possible to know in advance precisely how the costs will be shared for taxes. I added
Correct.
that.
I would
But
agree.
it is highly likely that consumers will pay a meaningful share. Meaning if the ranking member has her way, let's just tax corporations at 100%. Why not? Be fantastic, right? Nobody would want to start a company, but that aside, that cost would be added to consumer products, correct?
A tax or a tariff? What are you talking about now?
If the income tax for American corporations goes up, they will share that tax burden with their consumers. True or false?
Yeah, ultimately.
Yeah. So then taxes do raise inflation, but you don't comment on.
I mean, they
that.
haven't.
And
though.
you don't.
That's
But you
just
don't.
not true. I mean,
I got
empirically, it's not true.
The chairman's going to beat me up in 56 seconds. So, but you sent me a very nice letter, which I appreciate. And it says the Federal Reserve plays no role in commenting on trade policy. So you don't comment on supply shocks. You don't comment on tax policy, which clearly affects inflation. You don't comment on demand pull. You just said now that we should forgive student debt. Why is a person that goes to Harvard, that gets a gender studies major, pays Harvard obscene amounts of money because professors are grossly overpaid there? Is that person better than a working class Ohioan that is a plumber but can't afford a car because interest rates are too high and car prices have gone up? Why is that person? Why don't we forgive that person's car loan instead of forgiving their student loan? But you don't comment on that. You comment on tariffs. So I'm going to just show you.
I don't comment on tariffs at all, actually. I comment on
only
inflation.
commented on tariffs. You've
I'm
only
not commenting on the
tariffs.
wisdom of tariffs.
Look, the chairman's over there in the conversations. I'm going to show you a chart here. This is car prices.
I'm
This
paying
is-
attention,
this is-
however. You're
This is
now
car
off.
prices since this year.
Come on.
Car prices are down. Car prices are down. Inflation in America is down. We got elected by millions of voters. You got elected by one person. He doesn't want you to be in that job. And you are costing this government $400 billion a year by refusing to lower interest rates. Nobody in this chamber has that kind of power to have a $400 billion impact on this economy, on our deficit. And I just think that you should consider whether you're really looking at this from a fiscal lens or a political lens, because you just don't like tariffs.
Senator Warnock is next.
Thank you, Chair Scott. Thank you, Chair Scott, and thank you, Chair Powell. Good to see you. The United States national debt currently exceeds $36 trillion. Last year, we paid nearly $1 trillion in interest on the debt alone, more than the federal government spent on educating and feeding our children. Chair Powell, how does the Fed consider rising national debt levels during discussions about adjusting interest rates?
We really don't. We take fiscal policy as completely exogenous, and we look at the data that's coming in, but we don't, we're never going to take into account budget deficits and things like that.
Well, here's my concern. Maybe Congress should be thinking about it. The world is losing faith in America's ability to repay our debt. We have seen a sell-off in the bond market. the United States dollar has lost more than 10% of its value against the euro and pound and is down against nearly every single major currency in the world. Back in May, Moody's downgraded the U.S. government's credit rating because of growing debt and sinking confidence in lawmakers' willingness to address this issue. Historically, high debt pushes up interest rates, slowing economic growth and setting up a dangerous debt cycle where both interest rates and debt continue to rise. Chair Powell, how does the size and the trajectory of the national debt affect the Federal
Looks like we need to
Reserve's
take the
ability
opening
to
range on the
manage
damn ES,
inflation
apparently.
in good economic times and spur investment
Apparently.
and hiring in slower economic times?
I'm happy to say that today, those things do not affect our ability to do our job.
Because I know that this,
The
I know this
concern
shit's
really
good.
is that if we don't do something, then there will come a time at which it will be a problem, not for us, but for the country. But that, at this time, it does not interfere in any way with our ability to do
That is a realistic concern in the future, given the rate of
in the future.
increasing debt. And it's something I'm concerned about, and maybe because it's in the future, maybe that's why, you know, folks who have power, who sit in these jobs, aren't as concerned about it as perhaps the Congress should be. I'm concerned about it as a father of a 6-year-old and an 8-year-old. I'm concerned that my Republican colleagues are planning to ram forward a bill that, according to the Congressional Budget Office, will increase the deficit by $4.2 trillion. So I want us to think about that. We're taking food out of the mouths of hungry children. This bill could cut as many as 16 million Americans off of health care. When we think about Medicaid, 71% of the Medicaid recipients in Georgia are children. So we're taking their health care, and then we're saying to these children that you'll have to deal with these trillions of dollars in debt one day. $4.2 trillion increase. Senate Republicans are trying to use a budget gimmick to claim the bill only costs a fraction of that by simply not counting things they don't want to count. If they don't like the math, they just change the formula. But the markets and those investing in our country don't care about these budget tricks. And I don't think it will help my 6-year-old and my 8-year-old when the bill comes due on this. They know the truth, and they will react based on the truth. The big ugly bill will put the United States on a disastrous fiscal path, and it will be catastrophic for our economy. Even worse, the big ugly bill is cutting people off of their health care, and for what purpose? To give tax cuts to the wealthiest. So this is an interesting moment for me, for someone who didn't know I'd end up in politics, or just paid attention to politics over the years. They're getting ready to create a whole lot of pain for a lot of people. And the question is, for what purpose? To give billionaires a tax cut. I think we ought to work together to prioritize extending tax cuts for the working class. We shouldn't be cutting their health care. We ought to save the country trillions of dollars by not giving more tax breaks to the richest Americans. And if we try to work together, we can save our economy from this disaster and still protect working families from a tax hike. I believe in tax cuts. I think working class Americans ought to give them, ought to receive them. And we ought not be burdening our children with all of this debt. With that, I yield, and the chairman should take note that the Baptist preacher is done with 3 seconds left.
And the people said amen. Okay. Senator Haggerty.
Thank you, Chairman Scott and Ranking Member Warren, for holding this meeting. And Chairman Powell, it's good to see you here again. Chairman Powell, I want to talk with you about inflationary and deflationary trends in our economy and how they impact your thinking. I understand, based on your testimony and recent statements, that you're acutely sensitive to the inflationary risks of our administration's trade policy. And though I note that it's not the Fed's responsibility to attempt to steer or to directly offset that policy in any way, I look at that, I look at your perspective, but I also look at many of the other developments in our country that I think present the opposite risk, which is a disinflation risk. And let me dig into this a bit. We're witnessing artificial intelligence adoption at breakneck speed. That's going to bring about productivity gains in nearly every aspect of our economy. We're about to pass a tax bill. That tax bill is going to encourage capital expenditures and long overdue upgrades to our manufacturing capacity, again, increasing productivity. And if you think about the concerted effort that's being undertaken by our federal government right now to reduce waste and bloated, unproductive government payrolls, all of these point to disinflationary productivity gains. So given the competing sources of uncertainty that we're talking about, it feels to me like the Fed's far more focused on tariffs and the inflationary impact of tariffs than on the deflationary impact of the points I just mentioned. So if uncertainty around tariffs is the primary reason that impacts your thoughts, I mean, how do you counter? How do you?
I think that's very clear. All right. So after sweeping the liquidity below the opening range
we do
low,
look at the
price
overall
pulled
picture,
back and
actually
traded
what's
through
been
the
happening
21 and 50
services
EMAs.
inflation's been coming
At
down,
9:14,
and
the
that's
MNQ
been
traded through
covering
and closed
what we
below
see so far,
the opening
small
range
increases
low
in goods inflation.
and traded 30
I would
points
also
to the
mention
downside
factor that
before
that
retracing
didn't mention on
back
your list,
into
which
the
is
opening
regulation,
range.
which is an
At
area which
9:51, the
could also
MNQ
be
traded
over
through
time
and closed
disinflationary.
below the
So
opening range low.
we get that. I mean, I try to say that it's the broad sweep of
Maybe I should just
policies
have
and the
this as
broader
the
economy that
MNQ
matters
closed
for
below.
inflation. I
But
get asked about tariffs a lot,
I
and
mean,
that's the one where we all
the MNQ
forecasters are
traded,
expecting, a significant
maybe if I
increase
should say
between
traded
now and the
and
end of
closed
this
below.
year. We don't know
I
how
think
big it's
that's
going to be.
clearer.
We don't know when it's going to
clear, right?
come. But it's
Traded
just something
and
that
closed.
we're waiting to see more information on so we can make
So
a
the
better
MNQ
decision on
traded and
interest
closed
rates.
below
That's
the
all it
opening
is.
range.
I hear the discussion about not knowing the magnitude and the timing of the trade talks and the resulting tariffs that will ensue. It does seem to me that there's a bias toward viewing this as more inflationary than deflationary. And I'd like to ask you,
Or maybe since the
if
MNK
Ambassador Greer is successful at bringing the
traded,
trade
broke,
deals together soon and alleviating that uncertainty,
the
what would that do to your
MNQ.
perspective on rates? Would that put you in a position to think more aggressively about lowering rates?
So maybe I
Yes,
should just say the
potentially would. I mean,
MNQ
really, it's
closed
reducing
below. So
uncertainty would
at
help, and also
9:14,
just what's
the
going to be the
MNQ
final tariff rate
closed
and getting that
below the
settled.
opening range and traded. Okay, I think that's clear.
And I think that's the
All
path
right, so
we're
that's
on.
all
I
right.
think
So
that's
the
welcome. I
MNQ
think the markets will welcome
closed.
that as well, because I do believe that we're on the path, as you're about to say.
All right, so the MNQ
of
closed
having
below
some
the opening
significant
range
resolution
low
in trade
and
uncertainty.
traded
We've
30
lived in
points
an
to the
unbalanced
downside
world for
before
years, where the
retracing
United States has
back
had the lowest
into
tariff
the
barriers in
opening
the world,
range.
and
At
other nations have
9:51,
taken
the
advantage of
MNQ
that.
closed
Jameson Greer and his team, Scott Besson and his team, the president, everyone is making a
below the
concerted effort to
opening
fix
range
this. So
low,
I'm looking
but
forward to that.
pulled back,
The one other area I wanted to touch on, because
but
it's
pulled back to
touching
the
close to home,
21 EMA
and
before
that is
successfully breaking
legislation
away
that
from
this
the
committee
opening
has just
range.
passed out and that we just passed
Uh,
in the Senate. Has to do with the Genius Act. We just passed it last week.
which
And it
honestly,
provides an
that's
urgently needed regulatory framework
that's enough
for
data
payment
right there. So
stablecoins. And it requires
the
that they're
opening range,
backed
so from what
one-to-one
is that?
by cash or short-dated
491.
U.S. Treasuries. Over the last 5 years,
So from
the total value of
491,
outstanding stablecoins has
the low of
increased
that
from
candle right
approximately
there
$4 billion
was
to
449.
over $2 billion today.
So
One
honestly,
market participant has predicted that if a
even though
framework
this
like the
was a
Genius Act
bigger
is
move than
adopted,
this one,
total
this was a
issuance of
30-point
dollar-pegged
move from the
stablecoins
low.
could reach
This was
nearly
only a
$4 trillion
42-point move.
by the end of the decade.
So, well, I mean, so
I wanted
far,
to get your perspective again, Mr. Chairman.
the way
What
that we're going to
impact
do
would
it
this new
is,
source
I
of
mean, this is
demand for
enough of
bills
a
have on the
pullback
yield
to stop
curve?
you out if
And in
you're
particular, what impact
correctly
would it have on
trailing this to the
short-term rates?
downside. This could move further to the
So more
downside, but
demand is going to
this is
have
only
a
a
tendency
42-point break right
to
here.
drive down rates. I don't really have a sense of how
Uh,
big that effect would be, of course. And let me just say that it's a great thing that we're making progress toward a stablecoin framework.
Thank you, Mr. Chairman. I couldn't agree with you more. The direction clearly is that it's going to drive
Okay, I
rates
think that's
down.
very
I think
clear.
it's very positive for the economy, positive for our cost of borrowing as a nation. And I appreciate your response there, Mr. Chairman. Thank you very much. For the
Yes, sir. Senator Cortez Masto.
Thank you, Mr. Chairman. Chairman
Yeah,
Powell,
that's
it's good to
only
see
a
you.
9
Thank you
lot.
for being here. I want to follow up on a question.
That's only a
from
9 lot. I mean,
Senator
would it
Warner
be
about
better if
data
I just
deteriorate-
did this in minis
deterioration.
and just
I'm
had
concerned about that as
non-contracts?
well,
It's only a 9 lot.
That the Trump
That's
administration, I'm watching as
small
they've ended dozens of
compared
research
to
studies that business
what I
and
could
government
put
leaders
on this
rely
thing.
on.
I could put on
So,
200
my question
contracts.
to you, are there specific research projects that the Bureau of Labor Statistics provided
Okay,
that they no
so
longer do provide, that the Federal Reserve researchers cannot replicate on their own?
so this
or
one
through
happened
other
at
sources?
9:14. So maybe I
I'm
should,
not aware of any.
Okay.
Doesn't
maybe I
mean
should
they
add,
don't exist, but mainly it's the regular data they supply. And as you know, they've cut back on the size of that survey.
Right. So I would hope as we move forward, and not just in today's hearing, but if there is some other data or you're relying on data
so
that you're not getting.
that's
or
another
there's
data
now
point that we're
another
going to look at.
Source for
So
that data.
honestly, I'll probably
would
have
you
to go
please share
back.
that with the committee?
I mean, it's not like it's
Thank
that
you.
far
Yes.
because
During
it's
the
not
Biden
like
administration,
it's
the
not like it's
Federal
that
Housing
far.
Finance Agency and the Federal Reserve worked
And I
together to
can
improve
fix
access
this.
to the
I can fix
discount
that.
window for banks. What is the status of that collaboration with the FHFA?
So that's the initial sweep
I
of the
can't speak
range,
to
and
the
it's usually
FHFA.
happening right after
I can
the.
speak to the fact that
So the
we're
initial sweep of
really
this
looking
range
carefully
happened.
at, modernizing the discount window and making
But we're not there yet?
investments.
Seriously?
No, it's going to be, this is a project that will take some time,
All right,
the
so
discount window needs to be updated and refreshed from a technological standpoint
all
so
right, so
that
we don't need
people
this.
can access it readily and that kind of thing. It's still a little bit behind the age in that respect.
Do you have a time frame that you're looking at to,
I'll get back to you. It's
Okay.
something we've been working on
or is
hard.
there a funding impediment that is also
No.
addressing this?
No,
So, okay, if you could.
We're moving
provide-
ahead with it. I'll come back to you
Okay,
on that.
thank you. In March, the Federal Reserve, together with the FDIC and OCC, announced that you all intend to repeal the 2023 Community Reinvestment
All
Rule.
right. So
Excuse me.
it
Reinvestment
broke
and
42
proposed
points so
rule.
far.
I
We'll
prefer the proposed rule.
we'll
as
see
it
the
would better
full
address the
move.
needs of
But yeah,
states
this is
like
enough to stop you out
Nevada
if you
that
was
don't
trailing this
have
correctly.
headquarters of
So
large banks.
so the first move was
How
30
will you
points. The
ensure
second
that the
move was
new
42
CRA
points.
guidance improves access to financial services, to loans, to investments in underserved rural and
I don't know, man. To
I
me,
think in March, we announced that we're going to be, we're putting
yeah,
out for
I
comment,
don't know,
really,
man. I don't know.
a proposal to withdraw
All right.
the proposed guidance,
So
which has been the
about
subject of litigation. And in the
851 is
meantime,
when
we're
they
going
swept
back
the
to
liquidity
old
underneath the
CRA
range
rules, and I
the
think
first
that's where
time. So
it will be.
851.
I don't have anything more in terms of what we might
So
change
at
with respect to
851.
those old rules, but that's where
so
we
the
are.
default are the old rules,
Yes.
and that's, those may be.
CRA as it existed before
ongoing.
this
Yeah.
proposal, which actually never took effect.
Right, okay, that's helpful. Community banks benefited from high deposits during the pandemic. Since then, the net interest margin for community banks has fallen. What specific challenges do you see for community banks, if any?
Community banks, are very important. We want a banking system
All
that
right. So
has
the
all
initial
different
break happened
sizes,
around
and
like what,
shapes of banks.
9:14 is what I
And community
said.
banks are absolutely critical. They
So
know what's going on
9:14.
in communities and in a way that the big banks can't possibly. So they're a critical part of our infrastructure. And I think they've been under pressure because, frankly, regulatory costs have gone, fixed costs of regulation have gone up. We try not to contribute to that. The number of banks has been going down pretty steadily. And that's not something we're trying to foster, but it's a sort of long-run trend of really the last 30 years. So we try not to add to what is a secular trend because we think they're important.
Thank you. Thank you for being here. Appreciate it.
Thanks.
Ms. Chairwoman, I yield my time.
Who's up next? Senator Britt.
Thank you very much, Madam Vice Chair. Chair Powell, thank you for being here with us today. I want to start just by echoing the comments of Senator Cortez Masto when it comes to community banks. Obviously believe that community banks and credit unions, financial institutions that serve everyday Americans and main streets across the great state of Alabama and our country are so critically important to people being able to actually achieve the American dream. And want to make sure, I know we've talked about this the last few times that you've been in front of us. We've talked about the rewrite of Basel III. We've talked about long-term debt. We've talked about Reg II. We talked about a ton of things and talked about my concern that no one was looking at the cumulative impact of those things and the trickle-down effect. I just want to get a commitment from you that as you are reviewing rulemaking across the board, that you will consider and make sure to make the perspective of the smallest U.S. banks and non-financial industries like the ag sector who did not maybe have a seat at the table in previous administrations, but give them a seat at the table and make sure that you're thinking about the impact on those individuals and the people they serve.
I'm happy to make that commitment.
Thank you so much, Chair Powell. I also want to talk to you about an issue that has been brought up briefly today by another colleague of mine, but that is about childcare. So when we look at the childcare crisis in this country, we know that our economy loses about $122 billion a year because of affordability and accessibility, reliability, if you will, of childcare. It is said that anyone who has a child between the ages 0 and 5 actually spends 22% of their income on childcare. We have done the studies and looked at the numbers, and 59% of stay-at-home and or part-time working parents say that they would like to re-enter the workforce, but that affordability or accessibility is an impediment to do that. As we are looking to build back America, as we are looking to create opportunity and bring those things into fruition, would you agree that taking a look and being able to address, not asking you to comment on any specific proposal, but addressing some of the shortfalls related to accessibility and affordability of childcare would have a positive long-term impact on the economy?
So I think there's quite a bit of research showing exactly that, and we really
So
saw
the
it
initial
during the
one was 6
pandemic.
points in
As I
drawdown.
think you know and have pointed out,
It's only
it's
6
not
points in
it's not
drawdown.
an issue that we play a role on, but
Because this right
clearly,
here was 30
it would
points. Like I
contribute-
said, I guess that's a lot,
childcare
but
would
to me,
contribute to
yeah,
participation in the
30
labor force by
points.
many.
Absolutely, and as Alabama looks,
Not to
we look
sound
at our
smug or
labor
anything, but
participation rate.
that's not
It is
enough.
5 points lower than the
30 points
national
ain't enough.
average. We continue
But,
to look to ways to get people
if you-
re-engaged in the workforce.
But if you traded
and know
the
that
breakout
addressing this
correctly
head-on will help us be
and
able
got
to
this
achieve
this
that. So thank
entry
you so
when
much,
it
Chair
pulled
Powell.
back and broke down,
I look forward to continuing to work to get that done.
that was a 30
So there
point.
has
That
been
was 30
some
points
angst
right there.
vocalized about the reconciliation
So it
bill
broke,
and the
it
president's
pulled back to the
trade
21,
policies. And from my
and then it
perspective,
broke
much
30
of that
points to the
skepticism is both
downside
unfair and
from the
premature.
entry.
Market resiliency and recent economic data
But then it
actually
pulled
continues
back
to
into the
reflect
range, and then
confidence
that's
in
when
the
we
U.S.
got the dump.
economy.
But I mean,
Look
if you
at the
still
recent
followed the
Treasury
rules,
auction, which was
and that was
notably
only 42
successful and saw
points.
stronger than
It
expected
did pull
demands
back,
for 30-year bonds and stable, even
and it
slightly
traded
declining
down
yields.
a lot further.
To me,
So
this demonstrates that investors still
I guess
view
we'll
the
see what
U.S.
happens.
debt as an
Right
attractive
now,
asset, regardless
the
of
data
the
that we've
ongoing
collected.
policy discussions and debates and
So
forging
right
a
now,
pathway
42
forward.
points,
And those fundamentals of the economy,
42.
actually remain quite strong. Chair
Since
Powell,
it
would you
happened
agree
twice,
that the
we'll
components of our
document both
economy
times.
actually remain quite strong? And how does the Fed consider this type of strong auction performance in the context of your market
maybe that, maybe,
expectations and monetary policy discussions?
Okay.
So, as you point out, the Treasury market
All right.
is
So, and both of the
working
breaks, the
fine
first
just
break
now.
was 30
Liquidity
points.
is
The second
adequate,
break was
and,
42.
Bond prices are responding to economic
I guess that's
events,
decent.
and so
We'll see what the
bond
full
market's in
move
good
is.
shape. In terms of the strength of the economy,
The
I would
notes,
strongly agree. The labor market's in a solid place. The
but
economy
the notes will just transfer the notes to
inflation
this over
is in a pretty good place,
to the
come much
spreadsheet.
closer to 2%. So it's a very solid economy. We are watching the
And
labor market
we'll
very
see if
closely, as we always do. And a couple of things in particular. One is just a very low hiring rate, which goes with a low layoff
we'll see
rate.
what happens. We'll
But
see
if
what
we
the
were to
full
start to
move
see
is, and we'll
layoffs,
talk
we would see
about
unemployment go
what
up
happens.
quickly. And so we're watching that,
But okay.
carefully.
All right.
But we really, the labor market has remained solid, and I would agree with your overall characterization.
Thank you. Appreciate you being here today.
Thank you, ma'am. Senator Kim.
Yeah, thank you, Chairman. Thank you for coming
I
before
don't think
us
that's
today.
a sickness.
You've
I think
often
that's
said in the
just
past
regular.
that when it comes to monetary
I mean, if I'm
policy,
going
that
to trade
it
heavy
works
sides,
with a
then
lag,
maybe
right?
I should
That
just
this is something
trade
that
with the
you're
minis. But
having to try to assess the data that's before you.
Right.
90 micro
I'm thinking about this
contracts
because,
is
we
only
have the
9
Federal Open
minis.
Market Committee,
You got to remember that.
FOMC,
It's only a 9
5-year
lot,
review,
which honestly,
and you were
that's
talking
still
about
light.
tariffs
That's a
and the
light position.
uncertainty of this moment. So I guess I just want to
That is a
ask you,
light
how do you
position.
balance sort of assessing between more of the backwards looking data that you're able to, look at more tangibly in that way, but also addressing sort of forward looking models to try to understand where things are heading?
That's really the challenge that all forecasters have. And, really monetary policy needs to be forward looking. At the same time, we need to be humble about our how hard it is to forecast. So particularly at times of high uncertainty, which I would say I would include now, you really want to look at the real data and take signal from that, and not be too brave about what your forecast might be, because it's going to be highly uncertain.
So you're saying that in times of greater uncertainty, in some ways that makes you more interested in the backwards looking data to sort of guide you?
Well, I'd almost flip it around. Yes, but I'd almost flip it around and say at a time like that, you don't want to be giving a lot of forward guidance, and you don't want to be acting as though you have a lot of certainty about the path forward. It makes sense to move more slowly in most situations where there's more uncertainty. There are situations where it would not make sense to move slowly, but in most cases, you'd want to move more slowly.
Yeah,
It's
that's
uncertain.
interesting. I mean, I talked to some of my constituents back home. There's this one conversation I always had, that has really stuck with me, where, a woman was telling me that, there's so
So
much
you went short
uncertainty
at
right now in the
472?
world and certainly in her life.
20
that
points
she
away
says
from
it's
the
hard
range
for her to
break?
even breathe sometimes. She just feels this kind of weight upon her chest. And I've thought about that a lot because I try to think through what can we do to try to alleviate that concern, alleviate that anxiety for people. But you can see it. I mean, right now, whether it's about what's unfolding in the Middle East and the fragility of what comes next.
But all right, everybody,
When I
that's
look
it for
at
me
this
today.
reconciliation bill before us in the Senate, I do worry not just about the
Man.
deficit, as some of my colleagues have mentioned, but about the potential of significant job loss that we're seeing, whether in the healthcare industry,
Man.
whether in the energy industries. And certainly when it comes to tariffs, as you said, trying to think through what comes next in terms of whether deals are struck and at what levels. Are you taking into account that by sort of an
I guess
issue-based
I'm just going to let
level,
gold set
like,
up
are you looking at sort of
or
the global
rebalance itself,
instability
because honestly,
in
right
terms of the
now,
different crises that are out there? Is that factoring into
it's
how you're thinking
kinda-
about when we're
I mean, there
talking
was good
about
opportunities on
legislation here?
gold,
I know
but
you're not going to go into the
I don't like
policy
it when
per se,
gold kind of
but if
does
there's a
what it.
potential
I
for
don't like this.
significant
I don't
job
like the fact that it did all of
disruption, is that
this,
something that you're looking into as you're
and we're just kind of
forecasting?
trading in this range right now. So
Yes.
just let gold
we
rebalance.
obviously pay great attention to
We'll get back on gold
global
once it
events
gets
and
its act together.
in an effort to understand what's going on in the economy globally, because that does matter for our economy. So we
I'll
pay
probably have a
close
trade
attention
set
to
up
all of
probably
those things and
tonight.
track them. Ultimately, though, we're looking at the U.S.
But
economy.
all right, guys, that's
and
it
what
for
are the
me.
fundamental
We'll
drivers
definitely come
here,
back later on today, and we'll
then
look for
making
more
a judgment
opportunities to
based
earn
on
some
all
more
of
money.
that. And
With that said,
mainly, this is a big
peace out,
economy,
everybody.
and we're